afterwards, if you miss it last for some reason or you've got a deadline, you can always later on go back onto the ECB notes, all right? Okay, so let me explain, guys. Okay, so right in the beginning, okay, before I get into the various slides, you got to think of tax, right? And I always tell my guys, but honestly, I make a very bad lady of justice, right, with the eyes closed. But think of the scales always, right? Tax is all about balance. On the one side, you've got income. On the other side, you've got deductions, okay? So as we'll never say in terms of the fiscus, okay, hold on, you can get the deduction if you haven't paid the tax somewhere else. Or someone else will pay the tax so that someone else can get the deduction, okay? The module's also split in that way. You'll see in terms of how it sits, we're going to look on the one side and we're going to say, okay, fine, we're looking at income. Okay, and that's what we're going to look at tonight. All the income sections, how it all fits in, right? And on the other side, then we're going to go look at the expenses, the deductions. That's where we start with. Okay, between those two, so if you go and look in terms of your income, basically looking here from module 4, okay, expenses is going to be module 5 and 6. Okay, and then after that, which I'll get to a little bit later to explain, they've got a concept that they call capital. So either something's always revenue or something's capital. Okay, and that's what we're going to deal with later on in terms of module 7. Okay, so module 7, that's going to be capital. Okay, and then apart from that as well, what you need to go and look at, module 5 to some extent here as well, and then we'll go back to the theory as well and look at modules 1 to 3. Okay, we'll recap on those especially because you need to know modules 1 to 3 for your first assignment. But not just that, also a bigger part of it is basically in terms of modules 4 and 5. Okay, now if I can go a little bit back, I'll explain to you where we're sitting in. Okay, so if you're going to look, what they're saying is for something to be income, right, and where the whole thing comes down to, if you're looking at your tax comps, tax will always be to say, okay, look, this is what we've got, so this is my income, okay, now what can I claim against it? Okay, so has everybody got an accounts background? Or if you don't have an accounts background, just put your hands up. Don't feel ashamed. It's fine. Good on you if you don't. Okay, so we're all accountants, right? So you know you normally work out a profit, right? And you have taxes exactly the same. Okay, so we work out a profit. You say income less expenses is profit. All we're trying to get here the whole time is to work out a tax profit. Okay, tax profit's what they call taxable income, but it's basically the same thing, right? So either you will say that, look, I'm going to work out the tax profit by working out all the income. So the question will say, here's all the income, and then they'll give you certain things, and you'll say, yeah, for tax I can deduct it or not, because the rules are a little bit different to normal accounting, but similar principle. Income less the expenses, right? Trying to get to a tax profit or taxable income, and you'll pay tax on that at a certain rate. Okay, so either if a company is 28%, an individual will be on sliding scale, so depending who you are. But you really need to get to the whole thing to say that, look, okay, from here, I'm trying to get to, which we've said now as well, we're trying to get to, we've got certain income that we're going to look at, then we've got certain expenses, we can go and deduct against it. Okay, that will give me my tax profit or taxable income. Okay, once I've got that there, then from there, do I apply a rate to it? Okay, so let's say, for example, 28%. So 28% of that, and that will give me my final tax liability or my final tax that I need to go and pay, right? So the whole trick that you're looking at in terms of the various cases and when you're out in practice as well is obviously you want to get this as low as possible because you don't want to pay tax. So you're going to get that as low as possible, and generally all your court cases where the guy's trying to see, so you're trying to get that as high as possible. Because the more I can deduct and the less I put on top, the less I have here, so the less I have here. So the less SARS gets. Yes? Okay. SARS from the other side, SARS will always argue, no, you must pay tax on it. And we're not going to let you have that deduction and this deduction. And on a rainy day on the 4th of July, you can't get this deduction. So that's what you're looking at there in terms of the rules, basically. So it's the whole time this thing, just know the rules. Okay, what needs to come in as income, what needs to be as expenses that you can deduct, and then from there, what you can actually need to pay tax on. Okay, everyone happy so far? Okay, now in terms of the income, what you need to look at for as well, okay, is you'll say, okay, certain things need to come into income, okay, but then certain things they'll say is exempt. So they'll say, yeah, it should actually be income, but we say, look, don't feel bad about it. So like, for example, dividends. They'll say, look, dividends, if you look at it, dividends should come in, you should pay tax on it, but if it's local SA dividends, for example, it's going to be exempt. So from an income, from overall what needs to be on my income side, you'll have certain things you'll say, look, it comes in, but is exempt, and you'll get your total income that's going to come through, right? And then in terms of your expenses, what you're going to be looking at, which we'll look at later on, is to go and say, well, certain things I can just claim. It's for my business or for my own personal, running my own private company, right, as a sole proprietor. All of these expenses are normal running costs. So these expenses, SARS will agree and they'll say, yes, you can go and deduct them, right? But certain other expenses, they'll say, no, they're capital in nature. Okay? Now, that whole thing of what's capital in nature, and on income, it's got a similar principle. Think back to from accounting, okay? So I'm always going to go with you guys later on as we're going to say, like, okay, if it's an asset, okay? Now, from your accounts background, is everyone comfortable if I say an asset? This side as well, right? Okay. So if I'm saying an asset, think like buildings, for example, think chairs, think tables, something tangible that's going to be there for longer than a year. Okay. If it's there longer for a year, SARS says, no, hold on, you can't claim it immediately as an expense. Okay. But what they will do is they'll capitalize it. So similar to in accounting where we've got depreciation, for example, you're going to get a tax depreciation. At a different rate, SARS will say how long you can claim it over and what you're going to do with it, right? But on those capital items, you're basically going to have a tax depreciation. Okay, and we'll come back on this. I don't mean to jump. I just want to show you guys where we're at. So you're going to have a tax depreciation, which we'll look at in later modules. So we'll say whatever maybe was capital in nature, there's certain rules how long you can deduct it over or how quickly, right? So that will give you a deduction as well. So if you go and look at it, then at the end of the day, you've got certain things that's going to come into income, right? But they're going to be exempt. Okay. Then you're going to have certain things that you can just claim as an expense. Okay. Certain things you're going to have to pay for already anyway. So you would have paid for a factory to manufacture widgets, for example, right? But that factory, SARS will say, hold on, this is a capital item. It's longer than a year. And there's certain rules, but general rule, if it's going to last longer than a year, SARS says, you can't claim the whole deduction here. And obviously they're being smart because they want to limit the deductions you can get there so that you can pay tax more there, right? So they will say, no, hold on, you can't claim it now, but we're not being ugly with you. You can claim it maybe over 5 years or over 10 years. And the trick there you guys are going to see to do very well in exams is just going to be to say that, look, hold on, how long can you claim it over? It's just identifying that write-off period. The moment you know how long you're going to claim it over, then you A for away. Promise you. Then you'll do very well in the question. You just got to spot and say, okay, I can say spot, you'll know them, so it's not just guessing, but you'll know, I know, this is a so-and-so asset. That asset, the rule is this. For this asset, the rule is that. And you claim it over a period. Once we work that out, we get to tax profit, we get a certain rate. Modules 1 to 3 is all about what rate you can use and what's available, okay, and the theory on that, and you'll get to your final tax liability. Okay. Does it give you a nice idea more or less of what you're in for? Okay. I want you guys to feel comfortable with the subject. That's my main thing. I'm not a fan for just saying, well, just study it kind of thing. This is self-study, go read. If you understand it, it's going to be a lot easier. Okay, and you're going to enjoy it as well. Right. I promise. It's fun. Okay. Really. It's a lot better than accounting. I tell the other people I said that. And auditing. I actually enjoy auditing though. I like auditing too. Okay, so yeah, you'll know. So in terms of the rules, okay, so let's just go in terms of this whole thing. Okay, so what are we talking about? If we're saying income, okay, so on your slides, and you'll see we'll go back to it later on in module 4 in detail on the slides back. But like I've said, especially for the part-timer guys, I'm going to stick a lot on the handwritten notes, okay? And I'll ad-lib as we go and come back to me if you've got certain questions on the notes. You've got income, okay? So if you've got income, you need to go and look at the gross income definition, okay? That gross income definition, guys, that's like your ABCs of learning to write and read, okay? You have to know it, okay? The reason you have to know it's twofold. First of all, just because it's the base. It's the base of everything. Long ago, someone came up with it, and then we built everything on top of that from the income side. The expenses side, on what to deduct, it's got a similar thing. The general deduction formula, and we built on top of that. But all your case law, everything is built on that. A lot of the times, if there's still no specific rules, they'll go back to that, okay? Now, also from a practical export and to do well in the exam, they'll ask you a lot of theory questions on that specifically, on the general income definition, gross income definition. Then from there, right, there's certain things that won't meet this definition. But SARS was like, okay, we know it doesn't meet, but we're going to tax you on it anyways. So we'll still include it. So even if it doesn't, you'll learn with SARS as well. SARS makes the rule, and then when it doesn't quite work the way SARS wants it to, they'll write another rule to just override that rule. Okay, so you got to know the rules to sort of navigate through it, but that's where that comes in. So you have certain things that, even though it doesn't meet gross income definition, still get specifically included to pay tax on. Okay, so we'll look at those as well. But then also SARS is nice.